Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the top events that are expected to be moving markets today. And from the first screen, you can see myself sharing. You can see that the stock market was very green yesterday, and that was the reaction to the news that the US government shutdown, which has been the longest in history, is coming to an end. So as always, remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So we'll be beginning shortly. Just need to share something here. So just give me a second. All right, let's continue. I needed to just update a few groups that we are live now. Let's continue. You can see MK is already in the house, Thomas Mashuma, Simon Gitonga, Odiwa Opar, Jason, Susan Kirote. Good morning to you all. So, as you can see from the stock market reaction yesterday, it's very clear that the market is taking the news of the end of the government shutdown very positively. And this is expected to continue through today, even though we know that the majority of stock markets will be closed today. So let's talk about the economic calendar and what we're expecting for the day. Today being Tuesday, the 11th of November 2025. Happy 11/11. I know today will be 11/11 all day. Early in the morning, we had news coming in from Japan showing the bank lending statistics, and they've experienced a 4.1% growth year over year, beating a 3.8% expectation and higher from the prior reading of 3.8%. So Japan's current account almost doubled to 4.35 trillion, and this is up from the 2.39 trillion reported in the prior month, showing a big shift. So Trump's visit to Japan may have accelerated things, and this is very evident. So we saw that being taken very positively, and the Japanese yen strengthening. So we'll also be tracking how the market is reacting to this news. So most important, at 10 a.m., we had news coming in from the UK, and this is the labor market data showing an increase to 29.0K in claims, that is unemployment claims, a very bad indicator that the job market is worsening in the UK. So further statistics show that wage growth quarter over year was at 4.8%, which is a slowdown from the prior reading of 5% and missed expectations of 5%. So on top of this, we had the unemployment rate, and it ticked higher from 4.8% to 5.0%, and this was higher than the expected 4.9%, showing a really bad labor market or worsening labor market in the UK. So for the rest of the day, you'll be having major bank holidays from three economies. One, today is a French bank holiday in observance of Armistice Day. Then we'll be having a bank holiday in Canada in observance of the Remembrance Day, and also in the world's biggest market, which is the US, where they will be celebrating Veterans Day, which means that the stock market will be closed. So this leaves us with indices and currencies, which continue operating even when the stock market is closed. And we'll be observing closely to see how the market reacts to that. So first things first, there's a thread I had done about the UK economy, and this was just last week. So the UK Monetary Policy Committee votes in an XXX format to make Bank of England monetary policy decisions on interest rates. So the first X denotes the number of members voting for a rate hike, this X right here. Then the second X denotes the number of members voting for a rate cut. And then the last X denotes the number of members voting to hold interest rate study. And this means no change. So there is a total of 9 monetary policy committee members, and vote about 8 times in a year. So in the last meeting, they voted 027, meaning that 0 members voted for a rate hike, only 2 members had voted for a rate cut, and a majority, which was 7 members, voted to hold things steady, or basically no change, which basically held interest rates at 4%. So last week, there was another meeting by the Bank of England. So the Monetary Policy Committee voted this way. They voted 045, meaning that 0 members voted for a rate hike, 4 members voted for a rate cut, and 5 members voted to hold interest rate steady. So it's a majority wins kind of vote. So there was 5 members voting for holding interest rate steady, and that's what the Bank of England went with. So they decided to hold interest rates at 4% last week. So focus on the shift. 2 members from the last meeting, these 2 members out of the 7, changed their decision and moved to the central area. So the area that had 2 members now had 4 members in the last meeting, meaning that we have monetary policy committee members moving from hold and preferring instead to cut index. So the majority was only 1 member. If 1 member had flipped, we would have gotten a rate cut last week. So we only need to flip and we get a rate cut. Are probably focusing on the rising inflation problem in the UK. And as you can see, from September last year, inflation moved from 1.7% and gradually kept going up. And as per the last report, inflation was at 3.8%. Remember, the Bank of England targets inflation at around 2%. So 3.8% is way too high above the central bank target of 2%. And the last time we were there was back in around September last year, where inflation was 1.7%, below the 2% target. So the members who voted to cut interest rates are probably focusing on the rising unemployment problem. So as you can see, over since 2023, unemployment has been on the rise from around 3.6% to the most recent 4.8%. So today we got one new data point in the unemployment rate, and now going back to the calendar, you can see what really transpired. From the unemployment rate, you can see we have moved from 4.8% to 5.0%. So clearly, you can see that the unemployment rate is becoming a problem. And the last time the unemployment rate was this high was in February 2021, when it had hit a high of what? This was around 5.1%. So if you look at the Bank of England and what it was doing in, this is February 2021, let's see. February 2021, just give me a sec. In February 2021, if you look at interest rates, you'd notice that they were close to zero at around 0.1%. So when inflation was at its highest, okay, let's use a 10-year measure. So in February 2021, you can see that interest rates were at 0.1% and inflation was at the top at unemployment was at the top, around 5.1%. But then at that period we had COVID, so a lot of lockdowns had forced a lot of businesses to close down, leading to rising unemployment. So now we have the same unemployment, but the interest rates are very high at 4%. And this presents a unique problem to the Bank of England, which means that they might want to consider cutting interest rates. So looking at the other statistics, we have seen that inflation has been increasing, is at 3.8%. And also looking at the average earnings, excluding bonuses year over year, they have been reducing from a high of 5.9% in February, and now we have 4.6%, which indicates a worsening situation. So you look at 2021, earnings had really reduced. If you look at the same month, February, it was 4.4%, and now we are back to around 4.6%. So when wages are reducing, this becomes a problem, because when people don't have enough purchasing power, they don't buy a lot of stuff from the economy, aggregate demand goes down, and as a result, you tend to see a slowing economy, which risks getting into into recession, and perhaps even a further depression in the economy. So that's a red flag, and that's why we are getting the market reaction we got. So knowing very well that the unemployment rate rising above 5% is a problem, now the market is pricing in a potential that the Bank of England will go for a rate cut on the next meeting. So we know that we only need one more member to flip. So technically, the Bank of England has two mandates. One is to maintain stable prices, and that's why they target an inflation rate of about 2%. The other mandate is to maintain full employment. And according to the Bank of England, the level they see as appropriate, according to their measure, the level they see of unemployment as being close to full employment is 4.5% or below. So now unemployment rising to 5% is a big problem, because it's getting further and further away from their target of 4.5%. And as a result, we might be seeing the Bank of England going for a rate cut. So other than that, as we have mentioned, that there is a public holiday across major economies like France, Canada, and the US, we don't expect a lot of volatility in the markets. But then there are key developments happening in the markets right now. So let's cover some of these new things happening. So one, government shutdown latest. Senate approves bill to end shutdown, passes it onto the House. So this was the main news that the market was expecting for the last 3 weeks. So a new bill to end government shutdown was released, quickly advanced by the Senate and then approved on Monday at night, that is last night. So the bill has now been passed on to the House of Representatives in what could be the end of the government shutdown in the coming week. President Trump backed the measure Monday afternoon, making it likely that the bill could come to his desk within days. We have support from enough Democrats, and we are going to be opening up our country, he told reporters. Senate could vote later Monday to offer final approval of the package. It will then go to the House, where Speaker Mike Johnson has said he thinks he has the votes to pass it in his chamber. The House has not been in session since mid-September, but Johnson said he told colleagues on Monday, "You need to begin right now in returning to the Hill." House consideration could begin as soon as Wednesday, as the economic headaches of the shutdown continue to mount. That includes thousands of flights that are already cancelled for Monday and Tuesday. Trump suggested earlier Monday that he was unhappy with the air traffic controllers who took time away while they were foregoing paychecks, writing, "If they don't return to work immediately, they will be substantially docked." So the bill to end the shutdown will give these air controllers back pay and would keep the government open until the 30th of January of next year, fund some federal programs like the Agriculture and Veterans Affairs departments for the entire year, and put limits on Trump's ability to fire federal workers for the next few months, among other provisions. It's part of a larger agreement that also includes a promise from Senate Majority Leader John Thune to hold a separate vote on the issue of healthcare before end of the year. Democratic negotiators said the deal will give their party control of what's in that healthcare bill, but the lack of any immediate vote on that issue drew immediate condemnation from many on the left. Senator Bernie Sanders called it a horrific mistake. Food benefits also remain in limbo for the week as the Trump administration directed states that began issuing supplemental nutrition assistance program benefits over the weekend to undo their efforts. So that's the latest on what the US government is doing on the shutdown, and the market is receiving this really well. So ever since we got the news on Saturday night, Monday, the market responded really well with the rally in US equity gold as well as in silver, whereas the US dollar weakened. So I've already seen one of the questions around that about the dollar. I'll try to highlight it. This is from Thomas Mashuma. Good morning. Now that it seems the US shutdown is to be clearing, is it ready to say that the DXY to be bullish? Well, the end of the shutdown means approving a budget, and that budget means more spending or basically increasing the amount of dollars in supply. So, in that case, the likely outcome is the dollar weakening rather than strengthening on the short run. However, we could be seeing an immediate reaction where the dollar strengthens for a bit, but long term, we expect the dollar to be weakening as a result of this news. I'm seeing a good question here. Kindly clarify supply level and volatility. So whenever you hear of traders talking about supply level and volatility, volatility is the rate of change in price, and sometimes price changes really slowly, maybe moving 100 pips in an hour, in a day. Sometimes you might see a market moving, let's say 500 pips in a day. So if the average movement per day is 100 and you get 500, the day where you get 500 is called a volatile day. Of course, you can compare across different timelines. For instance, you can compare the price action from 1 hour to another to see the average change. And sometimes when the average change increases, we see there is increased volatility. It doesn't matter which direction. So supply level is not a thing like they are all liquidity levels. It depends on what happens next. So if it's a key support level where out of demand is coming in and the price changes direction moves up, we call that demand area. If price is going up, gets to a certain level which is unable to beat and starts dropping, then that can be named as a supply level, though it's just simply called resistance. Good question here from Sean. We saw gold break from its 4-hour consolidation. Do we expect price to retest the previous high and for it to create a new high, or should we first wait for markets to retest the consolidation zone? That's an analysis we'll be doing during the technical analysis part. What's your view on BTC USD? It's a bit sluggish, but eventually we'll get the rally coming. So right now it seems to be in what one of us has described as supply level, but in this case, I'm hoping I'm back. Kindly confirm on the comment section. I had lost my internet for a second. So, and now that you're expecting the government shutdown to end, do you see gold bull run continue to the better part of the next year? And what does this mean for the Fed interest rate decisions? So, on one side, we expect pressure to continue mounting on the Fed to cut interest rates, and that further weakens the dollar. On the other hand, for gold, on the back of a weak dollar, it could continue to rally. And also, you have to understand that the foundation of the strong gold rally we have been seeing is mostly demand from both central banks as well as hedge funds, and a lot of hedging happening around gold. So knowing that the stock markets around the world are mostly overvalued, you look at SP 500, Nasdaq, Dow Jones, the DAX, the UK 100, Nikkei 225 index, they're all trading near or at all-time highs. And out of investors with exposure to these markets, seeking to secure their profits by taking a hedge in gold. So we have been seeing out of demand, especially also on the physical. So that has resulted in a very strong rally in gold. So while the short-term US monetary policy decisions may impact both the gold market, long-term, these aggregate demand, where central banks are buying tons and tons of gold, remains a key driver, and the bull market is expected to extend into next year. So let's move on to the next part. I'm trying to see if there's any update I may have missed. Of course, there's the European stock market indices. So European stocks open higher as US government shutdown near end nears. So European stocks maintain their positive momentum as an end to the US government shutdown is in sight. The pan-European Euro Stocks 600 was up 0.5%, the FTSE 0.9%, the DAX 0.1%, the CAC 40 0.3%, FTSE might be 0.4%. Clearly, the market also in Europe is reacting very well to the news of the end of a US government shutdown. So that being said, I think on the fundamental side, we have covered pretty much every news we're expecting. So now looking at the performance of currencies, the dollar seems pretty strong today, with the UK pound being the weakest currency, having lost 0.37%. And we already discussed these, that the bad job market report could prompt the Bank of England to cut interest rates on the next meeting, which is negative for the UK pound. The Swiss franc still remains the strongest currency of the year, and this morning is the strongest, up 0.07% against the USD. USD is still very strong today. We are seeing an immediate reaction of the dollar being strong, but other currencies are not very far off, except the JPY, Australian dollar, and the GBP, which seems to be the biggest losers in the market as of today. So today being 11th, we can check the month to date. We have at least 10 days worth of data for the month. And clearly, the New Zealand dollar has been the biggest loser. The euro and the Swiss franc are doing well against the USD, whereas the New Zealand dollar seems to be the biggest loser over the last 10 trading sessions. So let's get on with some technical analysis and try to understand what the charts have in store for us for the day. So for those who are new to trading, this is called the MetaTrader 5 trading application. We use it for trading on the desktop. You can download it on the FXPesa.com website. And on the other hand, if you prefer trading on a smartphone, you can check out the Equity Trader by FXPesa from your Play Store or App Store. Equity written with an I, EQUITI. So let's continue. What's our chart of the day? If I was to go for a chart of the day, I would really have a keen interest on the pound USD pair, especially after we identified that the job market report that we just got today has the potential to impact the interest rate decision by the Bank of England on the next meeting. So here we got a very sharp drop after the news, and I expect this momentum to be extended, perhaps to the last low that we saw on Friday, meaning that we could be seeing this move extended to this area here. And once we get to this area, it's a wait and see to see if the market breaks below that and extends the bearish momentum all the way back down to last week's low around 1.30101. So this is a very interesting chart to be observing today. So another chart we discussed last week, I remember on Thursday during the market snapshot, we discussed this consolidation in gold, which had lasted about 6 days. And then we had a final breakout here. Yes, there was a bit of a problem with the breakout extending on Thursday and Friday, but towards midnight, we started getting some kicker. So yesterday at market open, the market pushed higher, go to a first target, which was the top of the consolidation here, and then extended the momentum to our next target, which was the previous high here. And once we got to that area, we can see the footprint of the market slowing down. So an attempt to break here, and followed by a pullback, and now we are attempting to move higher. The idea is that gold could retest some of these areas, and if you go to a higher time frame, in this case the 4-hour time frame, then you know that we have been in a very strong bull market that got, I would say, 3-week pullback, and now on the 4th week we are seeing a continuation. So this 3-week pullback is the same 3 weeks that the US government was in a shutdown. And now that the shutdown is coming to an end, it seems like gold is looking to reclaim its trajectory and move into newer highs. So good likelihood that we see the market going for yet another high. So notice the sequence of highs here, and the highest level here was around 41.61. So while I may not be extremely bullish for gold today, if there was a move to happen here, most likely it would end up around 41.61 price level. With low volatility in the books, major markets being on holidays, but most likely on holidays you'll see gold moving sideways, except if the yellow man was speaking. So any speech by Trump could further aggravate the market, increase volatility. So silver had an idea that we talked about 2 weeks ago of an inverted head and shoulder pattern. We had talked about the idea right here when the market was attempting to bounce from this area here. So what happened was the market dipped and got rejected immediately, dipped again, and then eventually started pushing back, eventually completing the pattern yesterday and making a break towards the upper side. So this is a classic case of an inverted head and shoulder pattern, which is a reversal of the original move. And now we are seeing silver moving towards a new all-time high. The all-time high we had was just about 3 weeks ago. So whenever you see the market making such a strong run, pullbacks become the golden entry point. So in this case, any form of pullback may represent a very nice entry point, but you have to be very careful not to jump the gun and enter too early. So the idea is that silver continues with a bullish momentum, recovering from the values it lost during the government shutdown. So Brent oil is still in some form of consolidation. If you really look at this, you can see that's a market trading inside of a symmetrical triangle. So from here to here to here, you can't see that this is a trending market. We can only see that this market seems to be moving sideways. But the further it moves sideways and there's two trend lines approaching each other, the more the likelihood that we are going to be having a break. So if we have a break towards the upper side, that means we go for bullish positions. And if the break happens towards the lower side, we go for short selling positions. So as for the US stock market, very strong reaction here, very strong jump here on Friday towards the end of the day. Then yesterday, an acceleration. And now we are testing a key level resistance area. You can see the highs that we saw last week and the high we saw here. The market is really struggling to break above that. But yesterday is a clear day where the market was extremely bullish. So you go to a smaller time frame, you realize that since last night, this market hasn't been moving much, and this is the Dow Jones. So we continue tracking the sideways momentum until we have a break, which will give us a direction in the market. So if you look at the Nasdaq, it's kind of the same thing. A market that was really attempting to recover, found some resistance here after a very strong rally on a Monday. But then the price action today is not very promising. This is not the market where you want to enter immediately. So continue tracking this movement until you see big moves coming, big candlesticks. So SP 500 also made a very strong comeback here on Friday and Monday. And now, since we got to that resistance area, there doesn't seem to be any form of volatility playing out here. And now that we are trading today in a public holiday, we don't expect much from these three indices. Perhaps the breakouts will be happening tomorrow. So same case applies even on Bitcoin. We had a very strong recovery, getting to 107K. Then here we are seeing a pullback, which likely means that you're entering some kind of sideways momentum until the public holiday is over, and then we start seeing momentum coming in. So the dollar index is still in some form of trance, some sideways momentum from yesterday. So it hasn't had much of a big reaction except the big move that happened at market open yesterday. Today and yesterday. The rest has been more of sideways momentum. So the week opens, dollar index jumps up, but then remains within that range for the rest of the day. Market opens again, dollar index jumps up, and then market remains in that momentum for the rest of the day. So on average, if you had to decide the movement of the dollar index, it would be something like this. So with the dollar index moving sideways and the pound being weak, then this makes us pound USD our chart of the day. But then you have other currency pairs like Audi USD that seem to be really struggling to make or eke any gains from the USD. So while the Australian dollar has been pretty strong, right now it seems pretty weak to me. So you go to the 15 minutes time frame. It's not too difficult to see some kind of M formation here. Market going up, pulling back to this area, going up again and pulling back to the same area, which shows some kind of weakness in the trend and potential reversal. So I'd be really tracking to see if the market was to go for a break right here. That would be a signal to a short selling trade, but that hasn't played out yet. So it's a wait and see scenario. So you look at Euro USD, all you see is a consolidation, and it's understandable given the number of holidays we're expecting in the markets today. So clearly, it's a market that is moving sideways, and we remain patient and wait for the break. You look at the dollar Swiss franc, we discussed the market getting back to a prior support area here. This is something we discussed on Thursday, played out as expected, completed on Friday. Then on Monday, Tuesday, we are seeing kind of the same theme in the market. So you go to a smaller time frame, like the 15 minutes time frame. Then you identify all these, some area of resistance here, which can be extended all the way back. So every time the market has gotten to that trend line, we have been seeing is some sharp drops. Then we look at our support areas here, and we see the potential of the dollar basically breaking against the Swiss franc. So remember, the Swiss franc has been the strongest currency since the year started. So an area of interest would be this area here, key level support area. So if the market was to breach below this level here, then that would mean a likely opportunity to go for short selling positions, having breached yesterday's low. This is Friday's low. We have already breached yesterday's low. Now this Friday's low is being tested, and if the market breaks, then we could be seeing some momentum downwards. So as for the dollar yen, it seems a bit spooked, but it's still moving sideways. So unless we have confirmation of a break, the dollar yen is still in sideways momentum, more like some form of limbo. Um, the overall trend, seems to be bullish, meaning that the market is expecting a break support, or I would say 3 different times. And now we are seeing market in Japan, where the trade balance almost doubled in a month, and that was supposed to be very good for the JPY. But from what you are seeing on the chart, this was the Sydney session, the Tokyo session, and now we're in the London session. So perhaps the idea is to trade within the range, and if you see evidence of sellers coming in, then we can target the lower side of the range. So Nikkei 225 index really struggling to recover. Notice how we got right back into the channel territory. An attempt to move up and then down and then up. And we can say that this um, is a swinging market with a 2-day swing downward, then a 2-day swing upward. And now we could be saying that there's another swing downward playing out, which started somewhere around midnight, very sharp drop and then recovery. But now, as we get into London, there doesn't seem to be a very strong continuation of the momentum. So UK 100 index with expectation of a rate cut to be happening on the next meeting. You can see the price action from yesterday and today is still very bullish. So from the 15 minutes time frame, a very strong rally yesterday, right from market open with pullbacks presenting opportunities to enter. And now you can see there was a very sharp jump after the news. This was after the news at 10 a.m. And now the market is still insisting on pushing higher. So this could be a likely target market for bullish continuation today, given that the stock market is trading at a new all-time high as of today. Yesterday, it printed a new all-time high. Today, we already have another new all-time high. So the momentum could continue extending higher. So I believe that is it. No, we haven't covered the European equity indices. So we almost missed that. So we have New Zealand USD, which is also in a range from yesterday's high, New York low, and today's price action. This was the high yesterday, the New York low, and the market hasn't broken either of the two bands. So New Zealand USD seems to be in this kind of sideways momentum. So I wouldn't be looking for increased volatility today. So the German 40 stock market index also seems very interesting. Having played along this trend line for the last couple of weeks, broken towards the upper side yesterday, and today the pullback seems to be bouncing off that same trend line, which seems like a likely continuation pattern where a market usually breaks, retests, and continues. So given the bullish momentum we are seeing in European equities, this could likely play out towards 24,199. The Euro stocks also made a very strong rally yesterday. Yes, there was a pullback this afternoon. This morning. And you look at this area here as the key level resistance. So it's a break retest continuation pattern, which implies that we could be seeing the market extending the rally. And the next set of targets could be along these lines here. And of course, the previous high here. So good chance that we see the market exploding higher and getting to 5,734. So French stock market index also breaking the prior high. So you zoom out on the 15 minutes chart, the prior high was right here. And now, after getting to that area, attempting to move lower or consolidating for a while, we have already broken that area, and now the push is for 8,159, and it seems like the market is pumping. So Swiss stock market index also doing the same thing, a very strong rally. Doesn't seem like nothing could stop it to getting to the prior high. So still more momentum expected to 127. Sorry, 12,714. Norway stock market index about to break out of a range. This is the range that the market has been trapped in. And if we break towards the upper side, then we'll be looking to cross a very important gap here. So a potential break here could lead the market all the way up to 1,557. So for USD card traders, we're also seeing the same pattern here. The dollar attempting to recover against the Canadian dollar, but nothing much seems to be happening here. I wouldn't say from yesterday New York session, today's high, yesterday's low, today's low. It seems like the market trading in a wedge, so we'll be waiting for an eventual breakout, perhaps tomorrow. So let's see if we missed anything here on the question side. So this Friday on 14th, we still have our event, our first bullish banter event. Make sure to check it out. We'll be organizing through the bullish banter Telegram channel. So if you haven't joined, you need to join now. I'll drop an invite link in the comment section. This is on YouTube. I believe you can also do it on X. Just give me a sec. Yeah. I need a YouTube link instead of a Telegram link. Sorry for that. For the guys listening on X. Okay, I need the correct link. Yeah, and if you're listening on YouTube, I'll be dropping the link in the comment section. That is done. So for those who are wondering what I'm talking about, it's an FXPesa Kenyan Traders Roundtable by Bullish Banter. So we'll be having a lot of raw conversations. So no screens, no signals, just raw conversations. We'll be having market debates and energy from Kenya's boldest traders. So we'll be talking about the state of trading in Kenya today, regulation and trust in the market, trader culture and community, opportunities and challenges, futures of trading, the future of trading in Kenya and East Africa, and the personal journeys and lessons from the panelists. So the event will be at iHit Kenya, Kilimani, Dennis Pritt Road, from 1 p.m. to 5 p.m. on Friday, the 14th of November, 2025. So, of course, there will be a lot more to be shared on the event. We can't be sharing all the highlights right here. So if you haven't signed up yet, make sure you sign up today. And on top of that, the Bullish Banter continues releasing new episodes. So in the latest episode, we covered a very important trader called Joseph Maina, who started trading in 2016. So he had a very interesting journey that you might want to listen to. Prior episode was Ibrahim's Forex journey, and the prior one was Daisy. We also covered Tim Bear, a very good expert on Forex trading bots. Everything you need to know about Forex trading bots, PAM and MAM accounts, then you have to check that one out. So there's a lot more happening in Bullish Banter. So join the Telegram groups so that you can get all the updates. So for beginner traders, register using the links in the description below. You'll get a free account that you will be able to practice as you learn. And there is a course called Novice to Pro with Rufus Kamau on FXPesa YouTube. So far, about 68,000 views. So if the traders who are learning keep coming back to the video. It means it's helpful. So make sure to check it out. Begin with episode number 10, Introduction to Trading, and then from there progress your way up until the last episode where you learn how to trade like a pro. So that is it for the day. Thank you, everyone. The event is a physical event. It's not on Zoom, so it will be on a iHit Kenya Dennis Sprit Road. So make sure to have some attendance. So we always appreciate when you like and subscribe to the channel, when you share these videos with other traders. Remember, these sessions are recorded. They happen Monday to Friday at 11 a.m. And whenever you like, share, retweet, we always appreciate. So thank you, everyone, and have a fruitful trading day. Happy 11/11.